Hey, how's it going, everybody? Micah Lamar here from Wall Street IO, the #1 backtesting platform for swing traders, with a quick update for you. Right now, we're in a bearish payday cycle. However, I do believe that we could have found support on Friday. Now, we entered this bearish payday cycle following a really long bullish payday cycle. Payday cycles historically last on average 7 days. I'll show you that data here in a moment. But you can see this bullish payday cycle here, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Very long cycle. And whenever you have a lower high of this magnitude, this late into the cycle, it's usually a good sign that a compression or a pullback's coming. Because again, historically, these only last about 7 days. So if you get a lower high like this much, usually it's a good sign of a compression or a pullback. So last week I talked a lot about the 175 area. And my comments were that if we can get above and stay above 175, I thought that there's a good chance we can get up to 180. However, we only spent about half of a day above 175. In fact, if you take a look at the candlestick, you could see we formed a pretty big topping tail right there. And then the next day we formed a much lower high. And again, a lower high this late in the cycle is usually a pretty good sign of a pullback. Okay. Additionally, if you take a look at the MACD has finally crossed to the bears. What this means historically is that when the MACD is bearish, the bullish payday cycles tend to be shorter. And I'll show you a good example of that in a moment. The important thing to recognize, though, is that we may have found a little bit of a support right below 170. This is the area that kind of acted as support for the last month as we've more or less been channeling sideways. Now, if we start to break below 170, I would have a little bit more caution. That would be a good break of support and would show a continuation of this bearish cycle, especially right now with the MACD basically crossed to the bears. Now, back to the candlestick here, you can see that we did have a pretty strong bounce off the 170 area, and we formed a little bit of a piercing pattern and actually closed green. So for now, this level has held, and as long as it holds, we're basically stuck inside this channel between a little under 170 and about 175, 176. Now let's take a look at the historical data around these payday cycles. Again, we're going to use our backtester here. I'm going to click on the backtest tab. I'm going to click on payday cycle. This is going to populate my buy condition and my sell. So I'm basically testing buy when we have our first green bar, which let me show you here an example. Buy when we have our first green bar and sell when we have our first red bar. It's basically the easiest swing trade strategy you can think of. Now here are the stats. We've got a risk reward over the last 3 years of 1.8. What this means is that you make about $180 on average for every $100 of risk. A 54% batting average, which can be improved a lot by using the MACD, and about 30 trades per year. Okay, these strategies on average, these payday cycles, tend to last on average, let's come down here to frequency right here, on average for 7 days. So again, that's why I was saying when you have a strategy for this payday cycle here, and you're 10 days in and we have this much of a lower high, that's usually a sign of a compression or a pullback, because we're really late cycle, we're way above the average, and then we form this big lower high. Almost every single major reversal in any stock or market or ETF many times happens from a failure to make a new daily high. Okay, so that's pretty important. So I want to talk about some other stocks and basically some of the index ETFs right now to highlight. Let's start with SPY. SPY also had a little bit of a rounding here this last week, and some of my comments from previous videos were that SPY was coming right into this main resistance point. Resistance here, 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 and again here. You could also see that the MACD in the SPY has finally kind of domed over and crossed to the bears this week. So a little bit of caution out there, especially if we start to break below these lows, we could continue this bearish cycle. But for now, this could actually become a short-term support. So watch this level from Friday's lows. I also want to show you the Qs. The Qs kind of formed a similar pattern where it kind of climbed up for the last couple months all the way into this previous resistance point right across here. And you can see again, similar to the SPY and the Apple, we have a MACD that has finally crossed to the bears. So while I'm not saying go and sell everything, you should have a little bit of caution, right? The risk reward is not as good as it was maybe down when the MACD was really bullish and we had all the signals that were confirming bullish direction. Okay, so what I also want to do right now is I want to talk about some strategy development. And to do that, I'm going to use, instead of our backtest tab here, I'm going to use our scanner. And what I'm going to do is I'm going to go and I'm going to discover strategies for my entire watch list here. So instead of saying for my current stock, which is the Qs, I actually want to go for current watch list, which is going to scan for strategies on all of these stocks. And then I'm going to come over here and I'm going to look for strategies with an annual return of at least, how about at least 20%? I want a risk reward of at least, let's say 2, which means that I'll make about $200 on average for every $100 of risk. I want a batting average of at least 55%. So let's move that, how about 56%? And I'm going to come down here to trades per year, and I want at least 5 trades a year. That's going to give me a trade at least every other month. And so what we're looking at right now is a filtered list of strategies. And right at the very top, we have an A trade set up at A-, which is still pretty good. What this means is, using our own internal Wall Street IO rating system, we can actually sort these strategies. And this one is actually using payday cycles and stochastics for Netflix. But let's go ahead and take a look at that. Let's take a look at the strategy here. Basically what we have is a strategy with a 2.4 risk reward, a 67% batting average, and actually about 18 trades a year. So that's over a trade a month. The more important thing, and I'm going to kind of zoom in here, is you can see that as Netflix has been going sideways and even down here, which is shown by the white line, this strategy has continued to profit and is actually moving up. So this strategy is really doing well at outperforming the stock. So right now, I'm not going to click on backtest because that would basically show the details of this specific strategy, and I want to reserve those for members. But what you can do if you are a member, you can come over to here to the scan tab and go to the most popular list. You can click on discover current watch list, or you could just click on Netflix for current stock. You could sort by rating and check out some of these strategies. I think you're really going to like them. If you do like the stats around these, remember you can click follow right here, which I'm doing right there. And now our system will send you a notification for when this strategy starts and stops. It's pretty cool. And if you want to see the makeup or the details or conditions of the strategy, simply click on backtest and we'll give you the whole buy and sell conditions for it. Pretty cool, right? All right, well, I hope you enjoyed this quick video. This is Michael Lamar, and I'll see you on the inside.